Welcome, boys. Welcome. We are back for another trade recap. I hope we are all doing good today. We got a London recap to go over, and also I'm going to be posting this New York recap to go over as well that we absolutely smashed. So be sure to check that out, boys, right after this one. Alright, so basically, we came in today with this level right here, and we also had this level here too. Fuck. Alright, so we came in today with this level. And if you guys don't know much about my levels, I am going to be making a little free course for you guys so you can get a gist of the strategy. But I am going to let you guys know how it works in this video too, right? But make sure to watch that video when it comes out, right? So, this is the easiest shit. You guys are going to be like, how the fuck are you making profits off of this strategy? It's so easy. Well, boys, stop making trading hard. Trading isn't hard. Trading is easy. This shit is easy. You know what's hard? You know what you can control but you won't control? It's your own mind. And that's crazy to say. Boys, the reason why so many people lose in this market is because their psychology. You know? They have fear of missing the trade. Right? They have fear of getting in the trade because they don't want to lose the money. You know? They're not confident in their setup. And when they're in the trade, they don't know if they should hold it. They don't know if they should sell it, or you know what I mean? And then after the trade, they don't know if they should trade more, try to win their money back. You know what I mean? So, boys, I'm going to inform you guys with everything you need to know about psychology and my strategy. For free. For free, boys. For free. So, we're going to be starting with this trade recap, and I am going to be trying to go more in depth, just in case anyone wants to learn, you know, try to give them a helping hand, you know, try to give back, boys. That's one main thing, you know, actually trying to give back. So, let's jump into this. So, we have this level. Normally, our levels are little skinny black lines, right? But when needed, which this probably wasn't actually needed, when needed, we will do a box. And yeah, we didn't really need a box, but I quite like the boxes. They're nice. They take over lots of room, so I use the box, right? Alright, so the reason why I marked this box is because levels are where prices reacted lots in the past, right? So if we look back here, we have reactions here, we got reactions here, and we got reactions here, and reactions here, right? So prices reacting to this level heaps in the past. Same with this bottom level that I had, right? Reactions here, reactions here, reactions here, reactions here, reactions here, and then so, you know, maybe reactions here, but this is later on, so yeah. But we can tell it's still a valid level because price is still reacting, right? So that's as easy as. It's as literally as easy as that, boys. Go in the past, and mark out where prices reacted in the past, right? Look how good this level is, right? I'm not going to make a level here because look, price is trading through it right here. It's trading through it. It's trading through it. It's not really a great level, right? But I will place a level somewhere like here because price is reacting here. 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 Price is, you know, put a level here even. Price is reacting here. So, just place your levels wherever price is reacting heaps, right? If it reacts more in the past and it still reacts now, then that means it's an even stronger level, right? So I just wanted to let you guys know how it works so you guys understand what my levels are, right? So I had this level, right, from these highs, these lows, and these highs here. And we opened on this black candle right here. And boys, make sure you have your pen, make sure you have your paper, because I'm going to be dropping some free sauce for you boys. Okay. So if price opens close to the level, what do we need to see? Okay, I've actually written it down, right? If price opens close to the level, we need to wait for a big retrace, right? So it opened here, and yes, it had it pushed through the level, and it came up and closed. That's a decent retrace. Oh my god. Keep fucking yawning. I need to lock in, bro. I actually need to lock in. I don't know what's wrong with me. Alright. Anyways, let's go. I'm sick, boys, but I'm here making this video for you. Because I'm not a bitch. We got this. So let's go. Alright, bet. So, we open above the level. When we open close to a level, we need to wait for a retrace, right? We push through. We have a fat retrace. As you guys can see, if anyone's fucking blind, you can see, came down here, pushed all the way up here. Boys, since we have opened close to the level, and we waited for a big retrace, now we've got that big retrace, we need a push past here. Because in the normal strategy, boys, what we are looking for is price to come to the level, have a retrace, and have a second push past the original retrace with momentum, right? So we had this retrace, and now we're waiting for a push past this retrace. Another thing I want you guys to take into consideration is we needed a push into here and then a reaction first, right? Now, I don't want to make this too overcomplicated. We'll try to, push the information into multiple videos so you guys can really get the understanding. But when there's a fair value gap, if you guys don't know what a fair value gap is, a fair value gap is basically a 3-candle pattern. It's when the first candle and the third candle, their wicks do not touch each other. As you guys can see, the wick of this candle and this one doesn't have a wick, but the body of this candle do not touch. So there's a gap. And basically, the market makers make these fair value gaps because, well, first off, when market's moving very fast, it has a lack of orders in a certain direction. If we're pushing down for sales really, really fast and we make a fair value gap, right, because this candle and this candle is not touching each other, it's because there wasn't enough buy orders, right? There were so many sell orders, there wasn't enough buy orders. So now there is a imbalance in the market. So the market will end up going back into that fair value gap to fill it. So it has an equal level of sellers and buyers. Easy as that, boys, right? But you don't need that information as much. Like, the information's good, but all you need to know, boys, is watch out for fair value gaps. Because if we're trading inside of a fair value gap, it might fuck you up, right? So to be safe, we want to wait for market to push into the fair value gap, push out of the fair value gap, and then push past it, right? So, for an example, I think I took a trade the other day with fair value gap right there. Which one was it? It wasn't that trade. It wasn't that trade. Look at all these wins, boys. Look at these. Such nice trades. I know there was one somewhere. Okay, right here, boys. Right here. As you guys can see on the left-hand side, we have this fat fair value gap right here. Actually, this is not a good example because I want it to be trading into it. Hold on. What about here? Okay, this is a good example. Right. Alright, look at this. This is a perfect example. So we have a fair value gap right here, and we also have a fair value gap right here. Right? Market opens on this candle right here. We get a push into the fair value gap, and we get a retrace. Let me try to show you guys in the 1 minute. Fuck, now I've got to go find it. Holy shit. Where the fuck was that? Alright, I got to find it for you boys. Just give me a second. It's right here. I bet. So let me show you. Right? So, you guys can see, we came up, we had a retrace, we pushed into this fair value gap, right? This is the main thing. We pushed into the fair value gap, right? Right? Now we need a retrace. As you guys can see, we pushed into it, we had our retrace. Now what we are looking for is a push past the highest point it got to before a retrace out of that fair value gap. It came, I entered, it came up and then it had a pullback, so I entered there. And then went straight to my take profit because I'm a fucking goat. Like, I'm a literal goat, boys. So yeah, I entered there. But yeah, if it is a fair value gap, just wait for a pullback. Wait for it to come into that fair value gap. Wait for a pullback and then wait for that second push. Cool. Bet, boys. Alright. So, fair value gap. Alright, let me go over this real quick. Okay, open close to the level. We waited for a retrace, as you guys see. Big retrace. Then we waited for the retest, which was the retest right here. And then a push past the retest, which we got right there. The retest was inside of the fair value gap, so it was just a really, really good setup. We entered there. Now, price comes down. Boys, price comes down. It starts fucking jerking off our take profit. I'ma bet this shit ain't probable. I'ma take out at half take profit. I don't care. I'm taking my money, and I'm fucking leaving. And boys, as you can see, it would have smashed take profit anyways. But hey, Remember, it's these moves and these market experience moves that actually count, right? Because I know too damn well, many times I haven't taken out in the scenario when the market's improbable and it goes and stops me out. And I'm like, why the fuck did I not take out? And then I have times that I don't take out and it takes my take profit. And I'm like, I bet. And that's what makes me not take out on the times that it does stop me out. So boys, remember, play by probabilities. Don't be a dumbass. If you guys really want to make money and be successful and rich, just follow your rules, you know. Don't play with your emotions. Don't gamble. Don't be a dickhead. Just fucking put your mind to it. Write down a set of rules. Write down how your mind should be. If you break any of it, then you should just quit trading, to be honest. Anyways, boys, that's it. I'll catch you guys in the next recap. Here's a live video anyways, so chit-chat. Nice push from yours 30. So now it's came into this free value gap, and it also has another one here. Let's see if we can get a solid retrace. Let's see if we can get another solid retrace from NASDAQ as well. I just wanted to push up a bit. If it can push up into this free value gap, and then come back down, that's what I like to see. That work I'm in for shorts. And US 30 is a little down syndrome, so he's not fucking doing much, but hopefully we can get a nice little push here. Let's see. Oh yeah. Let's see, boys. Chuck the stop loss above the level. Let's see if we can get a solid push. Let's see if we can get a solid push, boys. Nice. Alright. Let's do it, boys. Let's do it. We're in. Let's see. Stop loss can be above the level. Take profit can be right here. Something like that. Let's see. Nice pushes down. US 30 is coming down as well. We can change this. Something more like. Because this is good. We came into the top 5 value gap. Then we just. So basically, the setup, boys. The setup is right. We came here. We filled this 5 value gap. Well, we filled this one first. Then we filled this one, and we came here. Now, I guess we're sweeping the buy orders from the people buying from this 5 value gap. I guess, and then we're gonna go fill all of this shit in. I guess. Nice pushes down. When it gets to here, stop to break even, boys. When it gets to that red line. Let's see it. Let's see it. A little bit more of a push. A little bit more of a push. The reason why I'm doing stop to break even when it gets there is because it's the start of the 5 value gap, right? I want to be targeting something like the midway, right there. Okay, stop to break even, boys. Stop to break even. Let's see. Yeah, it's something like that. I put 2, so my stop loss is here. I put 2 contracts. Let's see if we can get a nice push. We're nearly there. Come on, let's see if we can get a solid push. Chuck this on the 1 minute. What have we got? Into like there. Oh. Come on. Alright, boys. Low-key. I'm finna take out here because it's gone down, came up, gone down, came up. I'm gonna take out here, boys. I'm gonna take out here at a small win. I could have waited for it to push down. It probably will push down. But since we are trying to pass the funded account, boys, this candle, I don't know how many times, but it came down, came up, came down, came up, came down, came up. And I always just needed a little bit more. Yes, I would love to wait for it to push back down here, because we can get like this, like double what I just got. But I just had a feeling, you know, it's probably the best choice, because I've seen many times where price gets really, really close to my take profit, and my take profit's the middle of a fair value gap, right? And it comes to it, test it, comes up, test it again, and completely reverses. It taps it, retrace, and then completely goes the other direction, right? So I'm playing this off market experience. Of course, we got a very small win today, but hey, it's all good, boys. It's all good. A win is a win.